Corporate earnings season kicked off today and will kick into really high gear later this week and next. Expectations relatively muted, but right now the market doesn't seem to care very much. Here to talk about what to expect, John Butters, senior earnings analyst with FactSet. Mr. Butters, welcome. What is the overall rate of earnings growth that you expect for the second quarter, and why do the estimates seem to be coming down rather quickly?
Right. Well, right now we're expecting earnings growth of just 0.7% for the second quarter, and that's down from an expectation of 4.2% at the start of the quarter. One of the reasons we saw a sharp decline in expectations was the unusually high number of companies giving negative guidance. We saw 87 companies in the index give negative guidance for the quarter. That's a record high. We saw a lot of negative guidance from companies in the materials, technology, and industrial sectors. Those are the three sectors we saw the largest cuts. And as a result, the growth rate has come down to the 0.7% expectation as of today.
When you see those kinds of cuts in expectations in materials, which would be mining, natural resources, industrials, does that tell you that the overall global economy is slowing?
Well, I think there's some concerns there. You know, last quarter we saw a lot of companies give mixed commentary in terms of what they were seeing from emerging markets. We saw some companies such as McDonald's and Coca-Cola say that conditions were still weak in emerging markets. However, other companies such as General Electric and United Technologies saw strength in emerging markets. So I think that's really a key theme to watch this earnings season. How are companies performing in emerging markets this quarter?
You mentioned technology there. I think the earnings have slowed there, but it's largely attributable to one company, or a big hunk of it is one company, Apple.
Exactly. The expectations for the technology is for earnings to be down about 6.5%. However, Apple is the largest contributor to this decline, and this is an unusual situation for Apple. For many quarters, Apple was the largest contributor to earnings growth in the tech sector. But starting last quarter and continuing this quarter, Apple is now a detractor to earnings growth. The company is expecting a 21% decline in EPS. It's expecting sales to be down for both the iPad and iPhone. And if you exclude Apple, that 6.5% decline would be cut almost in half. We'd only have about a 3.4% decline. So again, Apple's responsible for a large portion of the decline we're expecting in the technology sector.
There are lots of ways, John, to play with numbers to boost your profits, but there are fewer ways to boost your numbers with respect to revenues. What do you expect on the sales front this quarter?
Yeah, if we look at revenue growth, it's almost even with earnings growth. We're expecting about 1% growth. However, most of the sectors are expecting growth, 8 out of the 10. A lot of the weakness is coming from the energy sector, which is expecting revenues to be down 9%. If we exclude energy, revenues would be up about 3% overall. So again, not great growth, but a little bit better than the 1% expectation we're seeing right now.
All right, give me some artful speculation here, John. If the numbers are so muted, so soggy, why the heck is the stock market moving up as well as it is?
Well, it could be a case that the market's already discounting the second quarter and looking ahead to the second half of 2013, where expectations for growth are projected to improve quite a bit. In the third quarter, analysts are looking for growth to improve to 7%, and in the fourth quarter, that's expected to jump up to 13%. So again, one of the themes to watch this quarter, and we talk about it quarter after quarter, but again, you want to watch the guidance that companies are giving for Q3 and for the second half of the year, because again, there are lofty expectations for earnings growth for the second half of the year, and it'll be important to watch what companies are saying. Are they affirming that growth, or are they starting to ratchet their numbers down?
John Butters, senior earnings analyst with FactSet. Thanks for being with us tonight.